I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.
Good morning, my name is Scott Redler, Chief Strategic Officer at T3Live.com, and I'm doing an Apple update. I do one every few weeks to update where the trade is. What I like to do also is look at a little bit of the past history because there's so much to learn from stocks and charts, and patterns typically repeat themselves, and there's always signals and signs out there on how to maneuver your portfolio, also based on your time frame. If you look real quickly at the chart of Apple, you will see, if you guys remember this topping pattern right here when we eclipsed the old high here. The old high, I think, was somewhere around 644, traded above it, hit as high as 700. Then from there, another thing that I remember was when you had the bad earnings, came lower, traded into the gap, didn't care about it, and then for a nice little move, after holding higher, it followed the 21-day moving average all the way up to that peak. So even if you did not sell the top, because a lot of people didn't sell the top, and I think I was even long in here, you had the area of the 21-day, which was 681, to get out of the way, because that was when something finally changed, when it closed below it, which it didn't do for a nice 3 months. And then what was next? After the 21-day, it broke the 50-day. It also broke, if it was going to retest a prior high, it should have held here. And then you look at this trend line that it broke, it should have held there. So, fast forward, there were some signals that you could have seen to get out of the way, or at least, reduce the amount of shares that you had in Apple. So fast forward to where we are now, where we've been talking about a few different things taking place. First of all, you had this downtrend, that we talked about breaking. This was right around 440. At that point, I think in the last video I talked about a call spread, buying the 435s, selling the 445s for last Friday it expired, which wound up being a nice net 6.5 points for the call spread, besides buying the shares. Next price was when it broke this descending channel, which it's failed at multiple months. Look at even this, remember this rally that we caught here, which I'm going to show you, there was a lot to learn there too. It failed there. This was also the start of 2013 when we were not sure what kind of Apple we were going to have going into this year. Went up, showed no commitment, failed. So this time, what did it do? It pushed through and then held. Went sideways, and then just took back the 50-day moving average, something it hasn't been above in multiple months, showing you something different. As a technical trader, you always look for things to change somewhat so you know how to handle your positions. You can know how to handle your position size. And I remember after buying 435 to 440s, the first time to get to the 50-day, it was a sell. And I tweeted, I'm like, I'm going to sell some here, around 458-ish, or you saw it leave my virtual trading floor. And then I'm like, but if we see some commitment, we can go back to it. Kind of like the last time we played the oversold bounce. So if you look here, at this point of the chart, we started talking about, remember this quick red dog reversal that went up and held higher. So as it held higher, it showed commitment to this bounce. So you had some continuation, but then what happened? It failed right here at a higher level. So that said that, the trade changed in here, but it couldn't have any longer legs. So with that said, we started talking right around here. So when we were looking at it, I'm like, what, if we see the same type of digestion into this move, which we saw, we could see it, then take out the 50-day, which we did, and now we're opening $3, $4 higher. So the question is now what? What I like to do is I like to see it hold the 50-day moving average for some days. If you're long it and you've been long it since it broke this, you could always trim and trail a little bit into strength. I do see the next real point of resistance doesn't come back into about here, which is 484, and we're still only about 465, so there is room. And if you look at the size of the decline, this does feel like a really nice trade, but it still could continue if it shows commitment. So here's 484, and then the 200-day average has been moving down. That's at 523. I will personally, sit on my call spread, which I did last one. The new one that we talked about last Wednesday was buying, I believe 560 at the time. I think it was 4 and change, and then I sold the 470s for 1 and change. So my net cost for this new call spread was 2.5 to make 7.5. So I like that. I like having that kind of exposure. But then I'm also in the common, and I'll probably, what I always do, up $4, I'll trim some of it, and then I'll hold some and see if we could hold the gap and then continue. So I'm going to keep managing the trade, but ultimately, we've been in the common pretty much since the 440. One call spread wound up working out well. We'll see what happens with the next one, and we'll keep measuring the commitment, and we'll just keep taking trades. And if the stock has commitment, I'll have commitment to it. A lot of people are like, oh, is the low in, is it going to make new highs? At this point, nobody knows. They still haven't announced a dividend. They still haven't announced a buyback. Still a lot of fuel here. And I do think that overall, we saw the Samsung launch, which was viewed a little wacky. BlackBerry 10, there was some reports that they sold, not as much as they thought, and you saw the stock not act well. So I think, everyone's starting to look at Apple in a little bit more positive light. So let's hope that the stock action continues to warrant our commitment. So far, so good. It's been a nice trade, made up for a lot of those paper cuts. And as long as you didn't, experience a gusher, you were able to see it clearly and hopefully be involved with us. Scott Redler, T3 Live, the Apple recap. I'll see you later this week.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our two very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.